All right. Hello, everybody. Today is Monday, March 8th, and we are live. So for years, I have pre-recorded this short update every single Monday, and now I decided let's do it live. So thank you for joining me the next 5 minutes or so, and for your patience and grace as I get accustomed to all the different moving parts here. If you are watching in the replay later and you'd like to join me live each Monday, head on over to Facebook, to YouTube, or to LinkedIn and connect with me there so that you get notified when I go live. There should be links down below for you to do that. My goal here is to help you make your next financial decision, and then the one after that, a good one. You see, the secret to prosperity is not any one thing. It's not winning the lottery or coming up with the next great idea or any one thing. Sure, those things can happen, but the real secret to prosperity is in the next decision you make and then the one after that. So that's my goal here, to help you make your next financial decision and the one after that a good one. So to get started, I will give a short recap of what's happening in the markets like I've done every week for all these years. But before that, in case you missed it, week before last, we posted our 2021 annual tax guide. Tax season is upon us, and in this guide, we explore ways to help you prepare for it, from the major changes for 2020 to be aware of, to tax brackets, standard deductions, key dates, changes to itemized deductions, items to remember, how long to keep certain documents, and a few other things. And you can get a copy of this guide for free at our Facebook page. So if you go to our Capital Consulting Group Facebook page and you just scroll down, you'll see that it's pinned at the top of the page here. Just click on that. You'll get a free copy. Hopefully that helps you out. All right, so with that, I'm going to roll the intro, get everything teed up here for you, and then we will go ahead and get started. Life is too short to worry about what the next headline could do to your life savings. Hi, my name is Eric Hagan, and I keep my thumb on the pulse of the economy and the markets so my clients can focus on the things that are actually important to them. Thank you for joining me the next few minutes on today's weekly economic video update. All right, so hot off the presses, I have this week's weekly economic update. If you would like to have a copy of this emailed to you every single Monday, you can subscribe to that email list over at our website. You can go directly to investwithccg.com/subscribe. In this update, you will have what we're going to cover today, but also a financial tip of the week. This week's tip has to do with new parents. So if you're a new parent, or know someone who's a new parent, you'll definitely want to get this tip of the week. We also have key economic data that we're watching, companies that are reporting earnings this week. We also have a quote of the week, as well as a little bit of fun, a weekly riddle. So head on over to the website, subscribe to that, and we will be sure to email that to you. And in this week's recap, stocks have a mixed reaction to rising bond yields and increasing inflation. So stocks were mixed last week as rising bond yields and heightened inflation fears sent stocks on a wild ride, capped by a remarkable Friday afternoon rally. The Dow Jones Industrials Average gained 1.82% for the week, while the Standard & Poor's 500 increased by 0.81%. The NASDAQ Composite Index fell 2.06% for the week, and the MSCI EAFE Index, which tracks developed overseas stock markets, rose 0.76%. All right, the theme of the week was really that the rising yields were whipsawing stocks. The week began full of energy as stocks surged on a retreat in bond yields and approval of a new vaccine, with sharp gains in reopening stocks, hard-hit technology companies, and small-cap companies. But the optimism proved fleeting as worries over rising bond yields upended the high valuation growth stocks and sent the broader market lower. Deteriorating investor sentiment culminated in a steep sell-off on Thursday, sparked by comments from Fed Chair Jerome Powell that did little to allay investors' concerns about rising yields and festering inflation anxieties. Stock prices rallied on a strong employment report on Friday, but some of the enthusiasm was tempered by those rising yields. One of the surprising things happening right now is the strength of the US dollar. Last week, the US dollar gained 0.93% against a basket of international currencies, a relatively big move in the currency market. Year to date, the dollar has appreciated over 2%. US dollar strength this year has defied the expectations of many analysts who anticipated that a global economic recovery would prompt a shift away from the safe harbor of the dollar toward non-dollar denominated assets. However, rising US yields and a faltering economic rebound in Europe have instead propelled the US dollar higher, raising concerns about tight financial conditions abroad and its potential adverse impact on an emerging markets recovery. So that is all that I'm going to share with you all here today. There is a lot more in this week's update. So again, if you would like to get the full report, head on over to our website, subscribe, and I will look for you next week.
Hey, this is Eric again. That's it for today. Don't forget to subscribe before you leave. Here at Capital Consulting Group, we provide personal wealth planning and fiduciary investment management solutions for individuals, couples, and families. To learn how to see your entire financial situation, both today as well as every year into the future, go to clearfinancialfuture.com and watch the short 2-minute video. To learn how we give our clients' life savings the attention it deserves and to see how we're doing, visit smartmixportfolios.com. And lastly, if you'd like help investing your 401k at work, visit me over at 401kinvestmentpros.com. Thank you again for your time today. I'll look for you next week.